Okay, hi, good evening. I wanted to go over this Empowered Energy FHA program that I recently learned about. Now, today is, what is this, July 10th, and the big beautiful bill just passed, and it has in there that the credit for solar is going to be going away at the end of December. So, it's just coincidental that I'm now an energy advisor. And so now all of this energy and solar information is dropping in my lap. But I wanted to share with you realtors this program that you can talk to your clients about who may be considering purchasing a house or they like solar and they need to get on this. So this is with Equity Prime Mortgage. So they sent me this PowerPoint and I'm just going to go over a few of the key points here because it's really not for mass distribution. So, oh, how do I skip down to that? Okay. So FHA's made it easy for them to finance a solar system for their home, and they include that in the cost of the house. It includes the full cost of the solar, home purchase or refinance, including batteries and roof repair, replacement as required for the PV system. Okay, program benefits. Solar panels help reduce the amount that you pay for electricity. The price of electricity purchased from local utilities increases annually at a rate of 6% a year nationwide. So they see it doubling in like 5 years. So we do know that energy price is going up and a lot of people are resorting to solar to help. Okay, here's the part that's changing. Interest on the full mortgage with PV costs can be deductible on the tax return filing. That's going away after December 2025. And PV stands for what's the technical term for that? Photovoltaic. Photo meaning sun and voltaic meaning volts or electricity. So that's the panel that you see, but they abbreviate it as PV. And then, of course, they passed the Inflation Reduction Act that provided 30% federal credit on the total system price. For example, a $40,000 system would yield a $12,000 tax credit. And then the payment on the energy system is spread out over the mortgage term of 30 years and locks in the rate. So it's not an additional mortgage or lien that they put against the property. It's actually included in the mortgage. So you don't have to worry about when you sell it, you got to sell the system. They got to qualify for the system. It's not like that. It goes with it. But remember, I keep wanting to say all this goes away December 31st. So get it, get it, get it. Get 6 months. Um, so they don't have to have the market value of the system. They don't need to come out and appraise. It needs to match the purchase price or the value of the home. You don't have to show them return on investment evidence. It's no complicated loan formula and no contingency or HUD consultant needed. Okay, it has to be owned by the borrower, so they don't do the leases. You have to have a 580 credit score. The amount financed for the new system cannot exceed 20% of the property's appraised value. As example, the energy system has to be new, can't be existing. It can't be used to pay off an existing system. You have to qualify for the total loan amount with the solar system. So if you qualify for $300,000 house, then you need to also qualify for a like 20% above that. So it might be good to get a house for 280 and then you can qualify for 300. The full mortgage amount with the PV system cost must be scored with FHA's total scorecard. It's available in all states except North Dakota, South Dakota, Alaska, and Hawaii. And you have to have an address on the property, so it's no to be determined properties. And you cannot combine it with other down payment assistance programs. Okay, here's some program specifications. No HOA restrictions. You can use it with 203B purchase or 203B rate term. So 203B, the ones that are ineligible are the non-FHA loan types, down payment assisted programs, 203H disaster area, 203K renovation, or to be determined. So if you are doing a 203K, it won't qualify for that. So they call it the Hoper Borrower Assistance. Let's see. You can earn 3.5% of the home sales price up to $13,000. Let's see. Funds in the personal savings club account are managed by Hoper, and withdrawals are permitted at the time of closing to be used toward the down payment. Closing costs, realtor fees, debt payoff, or reserve. If the buyer does not need the funds at the time of closing, they can withdraw the funds post-closing as long as all the requirements above are met, and this is earned income. So they evidently have a savings club guideline. So the borrower also has to complete a 6 to 8 hour online pre-closing education, which is paid outside of closing. The cost is $149. And attend a post-closing financial mentoring course, which is $79.99, and that's paid outside of closing, and commit to periodic surveys. Program eligibility is conditioned upon receipt of an acceptable solar energy assessment that the borrower will save money through solar installation. Once the loan is closed, the solar panels are installed and inspected to ensure compliance, and the final payment and funds are released. So basically, you get your money after closing, which could help because usually when you close, you've given them all of your money, or this can help with closing costs, and then you don't have much money left for move-in or furniture. So this is a good program. They call it Hope for Homeownership Green Project, pre-eligibility letter. So there's also a green certification that realtors can get. I'm going to look into that as well. So the home buyer gets an education certificate. And it's funny that this is called AHA. And I have a AHA, been having a couple of AHA meetings. It's called Agents Helping Agents. So basically what I'm doing now is helping other agents to understand this program or see if you even knew it existed in case you have some clients that might be interested. Sample documentation. Yeah, so since I'm a lender, that's why I get it like this. But like I said, this is really not for mass distribution. So there's a sample here of a standard FHA and then a FHA with the Hopper program. The price of the house is the same. On this one, the solar costs $40,000. Mortgage payment goes up a little bit. Taxes are the same, insurance is the same, but the electric bill is $25. So total out of pocket, because now they have a $379 electric bill, their payments is $3,900 a month, where your payments will be $3,700 a month. And you got down payment assistance of 13,000. These over here, they didn't get it and they have to bring 17,500 to closing. This one you're due 4,500 at closing and you get a bonus tax credit. So your net out of pocket, you'll be getting back $7,599. And this tax credit will appear on your next year's return. And here is the flow process. You don't really need to know all of that. Um, this is the scope of work. It's a little high tech here. FHA connection. Okay, so I guess that's about the gist of it. If you have any clients that are interested in a program like that, contact me at vandercrossley.loanfactory.com. My cell number is 773-678-1085, and we can learn more about this together. I have not done one of these, but I just thought it was pretty cool that this existed, and I'm just finding out about it, and it's only 6 months to go. But hey, that's life. Life goes on. It'll be something bigger and better. But let's get this while we can. All right, have a good one.